Hello, everyone. Welcome back to the channel again. Very, very quick turnaround here. We're back again. W, I take it, is for the win, right? W, like winning? Or William? Maybe it's William. Okay, so as promised, we're going to break down the KURV family of funds, which I know I'm throwing you all a little bit of a curveball by doing this, but we haven't covered this on this channel, so we're overdue. We've got some competition for YieldMax for sure, not just Rec shares or Defiant, so we're going to defy the odds a little bit and cover a new fund family. William says, how do you feel about the Defiance funds? You really never talked about them, and I think FVPI is the best option if you want to retain capital, pretty solid dividend. So I just did a video yesterday evening on it, which is only like maybe 6 hours ago. I feel like we've been live streaming all night. We did 2 podcast episodes. I've done 3 videos, so I'm on a blitz for sure. But I can't lose my channel position here. Got to keep growing. Okay. So yeah, if you see that video, it definitely is a very solid dividend. It was like 26%. I like it for sure. And what I like about those funds, and it seems to be the case also with these KURV funds, is that they pay a lower dividend, but they're preserving the principal value, at least, more so than YieldMax does. So let's go right into it. I'm going to go to the site, and we're going to go over each fund that they have. Let's see. Would you rather have 1 FVPI share buy 2 KURV Tesla stock? Well, right now, I'm avoiding Tesla stock like the plague because it is plummeting. And if you've looked at it in the after hours, let's look at Tesla stock really quick, actually. It is plummeting. So I want to see some of these people that show their portfolios. I'd like to see them do a portfolio review of their Tesla positions tomorrow because things are going to hit the fan tomorrow during trading. So let's look here real quick. I'll show you all the after hours because Tesla, the earnings, they missed earnings pretty significantly today. So we haven't really caught any breaks for Tesla. So if we look here in the after hours, we're going to fall below $200 tomorrow at the open of market. Tesla will trade below $200, which is like, I can't even believe I'm saying this. Which I do have to give credit. I think a couple of my followers said back in the summer, Tesla will go below 200 before it goes above 300. So you all turned out to be right. Yeah, we're just free falling, not in the way we want to be. Let's see for earnings. So yeah, we missed by like 6 cents a share, but obviously the street doesn't react well to that. Next earnings are after tax day, one of our favorite days, April 17th. So yeah, there's Tesla. Just wanted to show you all. We're going to be way down tomorrow because we're already down 6% in the underlying. So to answer your question, I'm staying way away from Tesla at the moment. And I'm not going to sit here and blindly cheerlead for it. And I'm not going to say, oh, Tesla's great. We should all invest in it. Tesla investors are the happiest people because I'm a Tesla investor. And I can tell you right now, I am not happy with the performance. So I'm not going to be like a blind cheerleader for it. I want to be real with you all. Glad I sold out of Tesla. Well, good for you. Hopefully you didn't lose too much. Keeping all my Tesla, though, will be fine. Yeah, I would definitely keep the stock. I'm not making any changes in my Tesla position. I just got to watch it ride down. Hopefully it comes back, but we'll see. I don't like the whole reverse split thing. But anyway, let's look at TSLP and some of the others for the KURV funds here. Okay, so on the website here, I'm liking what I'm seeing. So the distribution for TSLP is about 28%. And look here, we have an unsubsidized 30-day SEC yield of 4.06%. We have 4.21% 30-day SEC yield. That's TSLP. We've got like 6 of these guys. We've got NFLP for Netflix, 19.34% distribution yield, 30-day yield, 3.59%, unsubsidized, 3.43%. So we'll just go through all these and then we'll learn more about each fund. MSFY, the Microsoft one, 10.78% yield, 3.87 on the 30-day, 3.71 on the unsubsidized 30-day. Goop is Google, 12.61% distribution yield, 3.96% 30-day yield, 3.8 unsubsidized. AMZP, 15.01% distribution yield, 3.83% 30-day SEC yield, unsubsidized 30-day SEC yield, 3.67%. And then AAPY, Apple, 10.96% distribution, 3.77 30-day, 3.61 unsubsidized. So my question is, why does the Tesla one continue to be the highest of all of them? So let's look at it. Distributions monthly, 27.68 trailing, I assume 12 month. This is 0.6664 distribution yield, 2.12% distribution amount per share. And this went public October 27th. Expense ratio is kind of high. The net is matching Tesla. Net asset value 23.62. So I think we calculated at a 0.66%, or excuse me, 0.66 per month payout. That's 792 divided by 23.62. That's actually 33% based on the NAV. So yeah, there's that one. NAV, market price, historic premium discount. I like all the information they've got here. That's pretty good. Days traded at premium, days traded at discount. And here's the holdings. So it's a very similar strategy to TSLY and to the YieldMax strategy. We've got calls at 265, 290. We've got a put at 265. We've got T-bills, and then we've got cash and other. So there we go. Here are the distribution dates: November, December, January. Actually, this was just declared yesterday, 55 cents. So we dropped. That's why it said, what did we say? This is more like 26%, isn't it? 0.5555 times 12. That's $6.66 divided by 23.92. Yeah, that's exactly 27.8%. February 20th and March 19th are our next two payment dates. Now let's look at the card for NFLP. We'll go into this one, and feel free to comment away for all 8 of you that are on. Let's see. Oh, let's see. You sold out of AMZY for a slight profit. Well, good for you. I never was in it. I'd like an Amazon covered call ETF that captures more upside. Yeah, wouldn't we all? Is reverse split on Tesla for sure? That's what I'm hearing. Jay said in another interview, which we will cover on this channel, but I don't know if I'm going to do it now. I might do it it is morning, but I might do it like tomorrow if I can. When Tesla does recover, won't that be good for Tesla and dividends? Newbie. I think so. I don't like the whole reverse split thing. I would like it to just recover on its own, but we'll see. The markets are all very high. I think it will definitely pull back and then go back up for elections. Oh, I think it absolutely will. I think they want everything to be looking good. I almost wish every year could be election year, because all of a sudden inflation falls and all of a sudden all of our investments go up. Kind of makes you wish every year could be election year. Anyway, that's besides the point. Let's see. William is very chatty. Also, you never gave your opinion on Defiance funds. You staying away. You think they will just keep decaying, reverse splits its whole lifetime. No, I'm actually in 2 Defiance funds. I'm in the QQQY and the JEPY. And they're both doing okay. The principal's not fluctuating too much, and they're paying out relatively decent dividends. Not as high as YieldMax, I think, but I'm more concerned about the principal value. I'd rather get a lower dividend and keep the principal value intact. So yeah, I'm a fan, I would say. Okay, so the card for NFLP, not to be mistaken with NFL Players Association, but this is actually Netflix. This paid a 45-cent per share dividend. Net asset value, we're a little higher. We're almost $30 here. So we've already checked the math from the first one. We can assume it's correct here. And then we've got the historical, and then, okay, it's in 2 calls and a put, which one of them is the synthetic position, as they say. T-bills and cash and other. So there is that. 19.34%. And then each one gets lower from here. So the Microsoft one, we'll just look at this one briefly. Well, look at that. I've already been going 9 minutes. Time flies when we have fun, don't we? And we are having a lot of fun on here, you all have to admit. Okay, 27.21% NAV, expense ratio, yeah, 11% payout. So yeah, that is, yeah, like I said, 11%. There's that. Days trading at a premium versus discount. They haven't gotten over the positive threshold here too often. Let's see, same thing, 2 calls and a put. It's crazy what Microsoft stock is trading for, isn't it? T-bills, cash, and other. We'll just go ahead and look at all 6 so I can do a comprehensive review of the curve. So far, I think this could be definitely a viable alternative to YieldMax. The Goop Fund, 12.61%, 29 cents. So yeah, like I said, we've checked the math. 28.01, $28 NAV. There's that. It only traded early on at premium. Otherwise, it's been at discount. Wow, look at that. Since December, or excuse me, since mid-November, it's been at discount. Huh. Again, calls and 1 put here. T-bills, cash, and other. And then there's the payout date. So it's pretty much once a month. January 26th here, February 23rd, March 22nd. And so I like how it's pretty much done within the same week. Like for next month, February 20th. Actually, so this one, look here. Tuesday the 23rd, Wednesday the 24th, Thursday the 25th, Friday the 26th. Boom. You're not waiting for a weekend or anything. You get your dividend paid out. Same with next month. 20th, 21st, 22nd, 23rd, boom. Within the same week, you're going from dividend declaration to getting that sucker paid out to you. So that's pretty good, I would say. Same thing with March. Let's see, AMZP, let's look at this one, 15%. So this is higher than the others. 35-cent dividend. Inception date, Halloween. That's when we really wanted to be gobbling up shares of everything because everything's really recovered since then. Let's see. Days trading at a discount, pretty much most of the days. Amazon, 2 calls and a put. Treasuries, cash, and other. So same strategy that they're really following for all of them. And I think we have one more. AAPY, that's 10.96% distribution, 25-cent dividend payout per month. Expense ratio is the same. Positions are going to be, 2 calls and a put. Apple kind of was flat for a lot of the year. I feel like after the summer. There's our dividend payout dates. We've actually dropped a little bit, but stayed pretty consistent overall. So that is KURV funds. KURV funds. Let me read a little bit of the description here. We'll go back to some more comments here. Okay, I think they are more conservative than YieldMax because they're not maxing out the yield, and it seems like the principal value is staying intact. I might buy Goop just for the name. How about the other one, GUI? The best one, I still think, is PP, PayPal. How aggressive are the strikes? Let me look at one. They don't seem too aggressive. They don't seem too far out. Let's see, AVGO and Microsoft. I know about Microsoft. AVGO I haven't looked at in some time. Let's see, AVGO. Let's see. Oh, Broadcom. That's the security company, right? Wow. $1,000 or $1,253. Holy cow. This one's been off of my radar for a long time. Wow, look at this. This had no hiccup. Dang, why did I know about this one like 2 years ago? Good find. God, like it didn't really have a hiccup at all other than, well, it dropped from here to here. Wow, look at that crazy from September. That would have been a great call option. I'm telling you, these opportunities are out there all the time if you know what to look for. They beat earnings for, oh, shoot, I'm not even sharing my screen. Got to keep me on my toes here. Let's see here. And if y'all haven't joined my Discord, definitely feel free to. We need to get the Discord going. Look at this. Wow. Okay, so this is what I was sharing here. Ooh, excuse me. Don't know where that came from. 1253.87, up $27 today. But this is incredible. Over 5 years, from September 22 to August 23. Here we had this big run up. 444 all the way to 922. Then we pulled back here, 830 all the way up to 1253. Many a fortune is made in call options on these big run-ups like that. That is just incredible. They beat earnings all 4 quarters, 4 out of the last 4 quarters. Q1 2024, February 29th. They might be able to beat that one. That is incredible. Great find. All right, let's go back to the KURV site here real quick. Where's my, oh, here we are. Okay. Chips. Oh, yeah. Oh, from the chips. Oh, yeah, you're right. AMZY. Let's look at one. We'll take a sample of one just to see the strikes, and we'll compare it to, yeah, I'll try to. We'll look at AMZP, just since you asked. It'll be the coach's favor of the day. All right. And I only do this for people that are very engaged in the chat, of course. Hopefully you joined Discord, by the way. Have you joined Discord? You'll have to let me know. Okay, AMZ. It's only going to show me, what's the darn ticker again? Hold on. AMZP, that's right, for the KURV yield. There was a curve here. 2776. Let's look at the options chain. It's not going to tell us here. Which is so annoying with finance. It's hard to find like consistent information for sure. The option chain, come on. It's so weird. You know, it was cold here for days, then it's got hot again. Oh, come on, Yahoo. How does this not have an option chain? I could just look at the underlying AMZN, Amazon. Oh, come on. Amazon's recovering nicely. I feel like everything has recovered within the past year. Look at that. So our all-time highs, November 21. This was like pre-split. Okay, so we're getting back. I mean, look at this. From $84, the low. That would have been December 22 would have been the time to buy. We've almost doubled. 1 year target estimates projected 182. Wow, look at that. That's incredible. Hold on just a second. It's been a long day. Okay, let me look at the option chain real quick here. I think this is going to be my last video for the night here. Oh, you are in the Discord. Awesome. Yeah, don't you wish you went all in low and then be able to sell high, right? Your first stock ever was SMCI like 2 years ago. Only bought 50 of it. Oh, man. You must be like in your 20s or something, I would say, right? You're a fairly new investor. My first stock was Meta. I'm going to look this one up. Super microcomputer. 470. Oh, I bet this one did really well. Yeah, you probably wish you bought a lot more. Let's see. I like this. I like when the audience gives me stocks to look at like this. Let's see. Oh, so you bought, let's see, 2 years ago. Yeah, that one. I've never heard of this one. Super microcomputer. Dang, you know, I just wish I had a time machine and just could go back and scoop all of these up. Let's see. It's funny how many of you are on so late. I didn't think I'd get much participation. Usually this late at night, I can kind of screw up and sneak out a video or two and not get much audience engagement. But you all found me. That's good, though. We like it for sure. So this one has beat earnings. 381. Oh, it might have a little bit of a pullback, but dang, that is incredible. This has been around since 07, and it was only like a $10 stock back in the day. Amazing. I wish I could catch one of these and imagine getting options on these. Yeah, I figured that. So that was your first stock, right? Wow. Imagine doing from 2021, imagine doing a leap on this or several leaps. You would have made a fortune. This is incredible. I'll have to remember to back test this one. This is amazing. Good find. Good find. You're definitely on the right path for sure. The longer you follow the coach, you'll definitely continue on the right path to financial independence or the FIRE movement or whatever you're aspiring to. All right. I just have to throw in that canned remark, of course. Let's see. So yeah, SMI, I've never heard of that one. Let me read the description real quick here. See, this is what makes it fun when people in the audience find good stocks for us to look at. Let's see here, profile. 5,000 employees. They're in San Jose. They develop and manufacture high-performance server and storage solutions based on modular and open architecture in the U.S., Europe, Asia, internationally. Solutions range from complete server storage systems, modular blade servers, blades, workstations, full racks, networking devices, server subsystems, server management. Okay, that's a good company then for sure. Good company. Believe it or not, I've been here before. San Jose, bypass San Francisco, come through San Jose, even this little town called Morgan Hill. Yeah, traffic gets crazy through there. Anyway, okay, what else are we going to look at here? I'm not sure the delta is on, wow, 72. Yes, so you would have made a fortune for sure. What about January 20th? So there was a $400 upside on it. Okay, let me close this out. Let's go back to the KURV site one more time here. And they say, is it time to KURV your investment portfolio? January 20th, what's that? What's the importance of that date? Other than next year, that might be the when the new administration takes over. Who knows? I know a lot of good ones, but I was hesitant to jump in. I'm in mostly index funds, which I won't regret, but I'm increasing my risk tolerance. So let me say one thing, like my 401k crushed it last year, and that was because of being in index funds. Index funds protect me from my own aggressive instincts. So my 401k with the index funds did really well. So you'll never go wrong with index funds for sure. Luckily, because I could go crazy with just, if I had the money in the 401k just separate and I was doing options and stuff like that, who knows, I'd probably gamble and lose it all, but I'm glad it's in the index fund. So yeah, you'll definitely, what I would say, and this is what I do, I max out my risk. So I'm in all the, like I'm in the tech fund, the mega cap tech fund, I'm in large cap S&P, I'm even in small cap this year, and all those are going to have a really good year, I believe. So anyway, all right, let's look one more time. January 20th, what, 2 years ago? Oh, okay. All right, let's look at KURV one more time here. Let me see if I'll look at the Amazon one like you said. Okay, so Amazon is trading at what did we say, 157 or so? So let's look how far out the options chain is here. Let's see here, Amazon. Let's see. Okay, they have a 167. So they have an at the money call, they have an at the money put, and then they have a $10 out of the money call. Okay, so not too aggressive. Okay, so there we have it. All right, you all. Well, thank you all for tuning in. I am going to do a reaction to the J video on the other channel. Hopefully I'll get that out during the day. If you haven't already, please remember to like, comment, and subscribe, and we will see you all very soon. Thank you all for sticking with me and tuning in. Okay, we'll do one more comment. M1 and Roth are all index funds, tech heavy, large cap. Then I have a Robinhood for aggressive growth. Good for you. Those sound like all good ones. See you all very soon. Take care. Have a good rest of your evening.